All right, traders, a very warm welcome to you all. So, I hope you're having a good weekend and you all are safe in this current pandemic situation. So, today we will be doing a segment on a very simple, easy to use swing trading setup that you can incorporate in your trading style. This is not a moving average crossover strategy as it looks like, it's actually much different than that. This is actually very similar to the Holy Grail setup that we had gone over a couple of days back with you guys. If you haven't checked that video out, do click on that and have a look because it's very powerful and a lot of comments have come up that people have made a lot amount of money from that strategy. So this is a variation to the Holy Grail setup, as I said, because in this setup, I'm adding the element of stop loss. It's pre-built into the setup, so it can really help you to maximize your returns and lose out on very small trades. So let's get started. As I said, it's a longer time frame strategy that I'm using. So I'm using the 4 hour chart. You can use it on the intraday charts as well, 15-minute, 5 minute. If you are using it, do let me know in the comment section below. Right. So any strategy that we do has two things. Number one is what is the filter, and number two is the signal. So in this strategy, let's talk about the filters first. So I am using 20 period simple moving average. I'm not using the exponential, I'm using the simple moving average. The charts I'm using is 4 hours. I also like to do it on the 1 day charts because the more you increase the time frame, the results become more and more clean and much better. So, because in a longer time period, a lot of people are involved, so psychologically, trades become quite simple. The shorter the time period, the more the volatility, trades become complicated. Right. So, swing trading setup. I'm using a 20 moving average simple. Length is 20, it's in the blue color. I'm using a 40 simple moving average, and this is in the green color. Let me just change the color a little bit so that you can identify both of them. At the same time, I'm also using a direction movement index. So I'm using the ADX. I have chopped out these the positive and the negative directional index. I'm using the ADX. So if you want, you can use the RSI also. Basically, the point is I'm trying to establish a strong trend in the market. So ADX tells us how strong a trend is there in the market, whether down or whether up. That's immaterial. So I have plotted a line, a dotted line at 30 value. So if you are above 30, if the ADX is above 30, this means that the trend in the market is quite strong. And if the ADX is below 30, this means the trend in the market is quite consolidated or congested. Let me show this with an example first so that I can move forward. So as you can see, when the ADX goes above 30 over here, you can see a huge spike in the trend. A lot of buying pressure had come in the market. At the same time, on the contrary, when the ADX goes below 30, when it's close to around 10, 15 levels, you can see a good consolidated, congested market, essentially what we call trading range happening in the charts. So our main reason we are using ADX is to ride massive trends. And we can use this setup to ride big and massive trends. If you are using RSI, you can go for a value above 60 to identify good, strong trend in the market. Right. So I've got you guys the filter. The filter is ADX should be above 30. That is a must because if ADX is not above 30, it's below 30, markets will be choppy. So the setup will not work. At the same time, I'm using the 20 moving average, and I've told you in a lot of videos I do that 20 moving average is a magnet for your stock market. Whatever time frame you are trading, the price will always try to come and stick to the 20 moving average. It's a godly number. So essentially, if you are in an uptrend, so I'll show you what the strategy looks like. So let's say my ADX is goes above 30. When ADX goes above 30, it means you're in a strong uptrend in the market. So what will happen is the price will always come back and stick to the 20 moving average as a magnet, and it will keep on going above. So what we are looking for is number one, ADX above 30, and number two, we want the price to tick at the 20 moving average. So we want to touch at the 20 moving average to go long. At the same time, you can go short also. It depends upon the market. So if the market is quite weak and ADX is above 30, this means the downtrend is in force. So what we will be doing is we'll be going short on every touch on the 20 moving average. So that is basically what the strategy looks like. So let us get into some examples. It's quite simple. So let's do some examples and chop out how the setup is going. I would suggest you to try to use this and combine with your price action tools. So you should have a good understanding of support, resistance, and the other tools. So the thing I've not talked about is my 40 moving average till now. The 40 moving average is not for anything for a crossover or anything. It's basically to define my stop loss. So this is nothing but my stop loss line. So let's show an example. Over here you can see I am below the 30, ADX is below 30, so I'm not concerned anywhere in this market. Even in this area, I am taking the 20 MA, but still I'm below 30, so I'm not concerned. Another thing I would like to add before I go on is you just don't want to tick on the 20 MA, you want some kind of bullish strength on the 20 MA. If you want to increase the reliability of your setup, you have to get some kind of bullish setup on this 20 MA. So what I'm trying to say is, so this is your 20 MA and the price comes down to 20 MA. So this is like a pullback. What you want is something like a bullish engulfing here, or you want something like a hammer here, something that is establishing good buying at this level. And if this happens, you will easily, multiply the profit result that you're getting. If you just buy it without having a look at anything else, the chances of you hitting a stop loss will increase a little bit more. Coming back to the setup. So you can see over here, there's one tick. Is this an entry point for me? It's not, because you can see ADX is still below 30. So I'm not concerned. The tick I'm concerned with is something over here. You can see ADX goes above 30. That's my filter number one. Filter number two is my price goes below and touches the 20 MA. So you can see something like a hammer and an inverted hammer setup is being formed. So a lot of bulls, the bullish strength, bullish pressure in the market has been established. So you go long at this point of time, keeping a stop loss around the 40 MA. So if you are going long, you go long at 4360, giving a stop loss about the 4289. So you have a little bit room. You don't want to keep a very tight stop loss because you'll be getting hunted very soon. If you traders are looking for a tight stop loss, because when you are trading at the 20 MA, you are expecting a tight stop. What you can do is, instead of using a simple moving average on the 40 time a period, what you do is you can do a 40 EMA. So what will happen is you can compare the difference. The 40 moving average is actually a little bit, it gives you more room. If you are using the 40 EMA, you are getting much more tighter. So the stop becomes little bit tight. So you can use that setup if you are looking for a tighter stop. Coming back, so this is my first entry point. The second entry point will be right over here. You can see I'm still above the 30 on the DMI, and I'm taking that 20 moving average. Go long at this point of time. The targets you can define however you want it. You can keep it the multiples of your stop loss. So you can do a 1:1 risk or 2:1 risk. You can use pivot points, Fibonacci, whatever that you guys want, whatever you're comfortable with. Another entry would be somewhere around here. You can see price does retrace a little bit because it's a channel, it's a cushion. The 20 MA is not an exact line, you have to keep some margin, and that is why you have a good entry and you get a good profit. Let's do a couple more examples so the setup becomes clear. Charts of Jubilant Food on the 4-hour time frame. So do I take entries here? I get this doubts or questions a lot of time on my personal chat or on calls, that price is ticking 20 MA, why doesn't stay? Because the markets are sideways as of now. The ADX is below 30. So you are not going to get a bounce or a cushion from the 20 moving average. The reason the strategy works is because we are having a trending market. Also remember, strategies are not 100% foolproof. You will be hitting stop loss. What you want as a trader is a 60-40 ratio. A very good trader will have 60% profitable trades and 40% loss. So if you are getting 6 out of 10 trades correct, that means you are a very good trader. If you are getting something like a 3 or 4 on 10, then you have to maybe work on your skills, get some mentorship, get some good training to increase that to come to a 6 on 10 trades. So you cannot aim for a 10 on 10 or 9 on 10 accuracy in the market. Markets will always whipsaw you. If you are getting a 9 on 10, get ready to be whipsawed in the near future. Coming back to my example, 4-hour charts, Jubilant Foodworks, it's in a phenomenal trend currently. You can see at this point of time, ADX goes above 30. What are we looking for? We are looking for a tick at the 20 moving average. You can see a good hammer formation at the 20 moving average. So this establishes, this shows the amount of strength being accumulated at the 20 moving average. So you go long, keeping a stop loss here. If you want a tight stop, go to a 40 EMA, go long and get that profit. Also, if you are being hesitant to go long at this point of time, what you can do is use your price action. You can see a good flag formation being formed here. So once this is broken, you can go long here. So it's an extra comfort or extra confirmation that you can put on in your trades. Let's do a couple of more examples because my main reason is to show you lots and lots of examples so things become clear. Okay, Cummins India. Cummins India 4-hour charts. Again, I have drawn my area of value. The resistance stands at 430 levels, and we can see very well that the price when the ADX goes above 30, that's my filter number one. We are looking for a good tick at this line. Confirmed. You can go long here. If you don't want to go long here, wait for the closing. You can go maybe long at this point of time. And at this point of time, you get a double confirmation. Number one is your bounce back from a 20 MA, and number two is your breakout. So it's a double check, and this will give you a good sweet profit. Again, you are trailing your stop loss, and you might want to exit when the price goes below, or you have a predefined target. It's totally up to you. So you can keep trailing the stop loss unless until this price goes below the 40 MA, hits your stop loss, or you can go for a predefined target and getting the bucks in and exiting the market. So that's another approach that you can do. Another example is again on the coronavirus crash that happened. So you can see Cummins. So do I take an entry here? That's the first question. I will not. You can see very well 20 MA is acting as a good resistance, but my ADX is below 30, so I'm not concerned. The only place where I could have taken an entry was somewhere around here, or someplace around here, or someplace around here when my ADX has gone above 30. So when we are back testing, things look quite easy, but you have to keep these filters in place because otherwise things can get really bad for you. And we want to be able to manage the trades well, and these filters basically are good for you to minimize those losses. Another example is the charts of DLF. It's again the real estate sector has been doing quite good. After that stamp duty news that came in a couple of days back, the real estate sector boomed like anything. So again, you can see till now I would not take an entry anywhere here. I would not take an entry because ADX is below 30. So I'll probably use some other indicator or some other setup that in such a time period. When the markets go above 30, go long at the first touch of the 20 moving average, chill out, just put a stop loss at the 40 MA and trail the stop loss. And also, if you can see, it's a good breakout structure. You are in a good, this area was a very good support earlier. Also, it was a resistance earlier, so it's a very good line, the 154. It became a resistance later, again a resistance later, and after at around 17th of August, you broke this resistance. You again retested, and this was actually a confluence. So you have a retest of the earlier resistance as support. At the same time, it's a confluence of your support by 20 MA. So it's a very, very good long signal that you have, and ADX is above 30, so you're good to go. Finally, last example is the Hero MotoCorp chart. A very good simple example. 4-hour charts, the coronavirus crash that happened, ADX goes above 30. You're looking for short entries because the market is down, the trend is strong. So this is one strong entry. You go short at this price, keeping a stop loss at the 40 MA. Again, we go short at all of these prices, keeping a tight stop loss at the 40 MA or the EMA. On the contrary, we have another good example on the up move. So entire place here we are not concerned because your price, the ADX essentially is below the 30 mark. What we are looking for is when the ADX goes above 30. When it goes above 30, the trend is strong. Check. We want a good touch at the 20 MA and we are going long here. So also it's a good breakout that happened, and it's again a confluence of the earlier resistance being tested as support and also a 20 MA providing cushion. So that's basically what the strategy is all about. This was one last example that I would like to show. So if you buy just, for it to come to the 20 MA, you might get a little bit more retracement below the 20 MA. So that's why I'm telling you guys to not just buy based on 20 MA. Try to get some kind of bullish pressure here and then buy. So if you had bought it here, this is okay because you are having a stop loss in place. If the stop loss is being hit, it's all right. It's a good trade, nothing to worry about. But the chances of it to go higher become more. And you can see very well the 40 M is a good room. You have a good room in between. So the stop loss doesn't get hunted, doesn't get triggered. So that's all for now. I hope you guys like this video. So it's just an adaptation to the Holy Grail setup that we had done earlier. So do mention in the comment section how did you like this setup. Do give us a thumbs up if you like this video and subscribe to our channel. We are leaving all the links to our platforms in the description below. So do check them out and we'll see you next time.